Central Bank of Nigeria to develop risk-based cybersecurity framework for banks. World Bank to support Nigeria on economic growth. World food prices fell 3.7% in July with declines seen across all crop types. Plus, federal government generates 1.4 trillion naira from operating surplus in 11 years. Details of these and more on this edition of Business Express. Thanks for joining us. In the news today, more than 1.4 trillion naira has accrued to the federal government through the payment of operating surplus by ministries, departments and agencies since the enactment of the Fiscal Responsibility Act in 2007. The acting chairman, Mr. Victor Morako, said the operating surplus is made up of revenues accruing to government agencies above what they are approved to spend at the beginning of the budget year. He also noted that some of the 122 agencies that the federal government had listed as qualifying for the payment of operating surplus had started to avoid payment by indulging in creative accounting. The Fiscal Responsibility Act 2007 requires listed agencies to pay 80% of their operating surplus into the Consolidated Revenue Fund while retaining 20%. Similarly, the federal government is willing to work with development partners who share the same vision of accelerating Nigeria's growth, especially with regards to reforms in the power sector. The Minister of Finance, Kemi Adeosun, who stated this while receiving an audience, the World Bank Vice President for Africa, Hafiz Ghanam, said government is willing to leverage on the expertise of the bank to not only preserve the growth achieved so far. She commended the World Bank's projects in Nigeria, especially fiscal sustainability and transparency program, which has impacted positively on the economy.
What we need to make is the power sector reform program, which is an extremely important program to us. For us, as far as GDP growth is concerned, the one thing that's really going to accelerate growth is power. And all the things that we need to do to ensure that we can get that power sector reform package and program off the ground is really, I think, for us and for the International Economic Relations team, our number one priority at the moment really is power. How do we sort out the challenges in the power value chain? How do we leverage on the World Bank and its relationships and its wealth of experience in getting us to move this sector forward?
I wanted to come and listen to you to see how we can support Nigeria, how we can help get the Nigerian economy grow faster and achieve all your development objectives.
Meanwhile, the Central Bank of Nigeria says it has revised the clearing system rules for deposit money banks. The Director, Banking and Payment Systems Department, CBN, Dipo Fatokun, in a circular issued to banks, mobile money operators and payment service providers, said the revision of the Nigeria Bankers Clearing System rules was in furtherance of its mandate for the development of electronic payment system in the country. The revision, which is to take effect from September 1st, 2018, will ensure the presentation of electronic payment instruments to the clearing system in the next applicable session. Now, in other business developments, the Central Bank of Nigeria is developing a risk-based cybersecurity framework for deposit money banks and payment service in partnership with stakeholders in the financial industry. Statistics put the cost of cybercrime globally at $700 billion annually, a figure projected to rise to about $2 trillion by 2019 due to the rapid digitization of consumer lives and company records. The Deputy Governor, Financial System Stability, Central Bank of Nigeria, Aishat Ahmed, said CBN is committed to strengthening the regulatory and supervisory framework for the cyber risk and encourage realistic vulnerability testing and contingency planning for regulated institutions. In the case of Nigeria, about 198 billion naira is said to be lost to ever-increasing cases of cybercrimes per annum, usually perpetrated through financial systems. The Naira-Yuan swap deal will deepen Nigeria's economic opportunities with China and ease payment issues associated with international trade. President, Abuja Chamber of Commerce and Industry, Adetokunbo Kayode, says Nigeria's trade volume with China trade volume of $5.8 billion by May, which indicated an increase of 7.3% over 2017 record, was a reflection of the impact of the deal. He lauded the Central Bank of Nigeria, CBN, for embarking on policies that had improved and stabilized the economy, saying the currency deal was one of such efforts. 2 weeks ago, the Central Bank of Nigeria commenced the auctioning of Naira for Yuan as the implementation of the Memorandum of Understanding between Nigeria and China on the renminbi took effect. The Naira for Yuan swap deal was secured in May after the signing of an MOU. It is worth $2.4 billion. The currency auction is to last 3 years and expected to increase trade and reduce pressure on Naira-dollar exchange rate. Now joining us live in the studio to discuss the renminbi is a development economist, Paul Alaje. Glad to have you join us.
Thank you so very much for having me.
Let's start this way. What's your take on the policy?
Yeah, very good one. It's going to expand the economy. Before now, Nigeria had to depend on the USD, that's US dollars, before we can get access to FX, that is foreign exchange. And eventually, where are we going to buy most of our product from? It is still from China. So you're going to have a situation where you need to go access US currency, and after accessing US currency, you now go back to China to get your product. So in this wise, when CBN came up with this or engaged some of the stakeholders regarding how we can have a direct transaction with the countries where we import most of our economic life from, which is China. So it makes some economic sense to deal directly with them, and that has removed a number of bottlenecks. First, access to FX, access to US dollars. You know, again, whatever is happening to US economy, we directly affect the US dollars. So if we are not dealing with US economy directly, we can now go to the Chinese yuan, Chinese currency, and have such exchange with them.
All right, the Abuja Chamber of Commerce and Industry is optimistic that this swap deal will increase trade relations between Nigeria and China. Do you see this happening?
That is already happening. I'm not just seeing it happen. It's already happening. Nigeria is going to have more access, more penetration into China economy. And this is why policymakers in Nigeria should start to consider what is it that Chinese people need that they cannot produce. Definitely no country can produce all that it needs. China certainly has some kind of needs. It could be raw material based needs, it could be finished good based needs. It may not be manufacturing, because China, as it appears today, is the manufacturing hub of the world. But China definitely needs something. So the question is, how many of our petrol or crude oil will China buy from us? Nigeria will soon be producing petrol. If China is unable to refine us, or China is considering, because of the huge population, more than the population of entire Africa, may need some kind of refined petroleum, can Nigeria sell some of these petroleum to China? Because we can access their currency directly, then Nigeria will get more jobs, and Nigeria will also have a better economy by just dealing with China.
Do you see this easing pressure on the dollar?
Yes, well, in the short run, there will be easing pressure. But this is where technicality of economics calls in. There is an algorithm. Algorithm indicates even if we are dealing with Ghana and we are spending a cedi and we're not spending even dollar, it will still have implication on the dollar. I will give you an instance. In 2016, where we have this disparity in our exchange rate before it was recently adjusted, you see, Naira was having so much pressure on the dollar. But if you want to exchange to the next door neighbor in Ghana, it still has implication, even though we are not buying as such. So irrespective of the country you buy from, whenever there is pressure on your currency from maybe China or United Kingdom, it's still going to have implication on China. You know why? On US dollars. You know why? Because the US dollar is a global currency. Everybody you are dealing with, China is also dealing with the US and is also having the exchange. So proportion of our exchange rate will influence what we are going to exchange, not directly, but what we exchange with other countries indirectly. So the algorithm regulates what happens. If we are doing this just because we are going to have ease on the US dollar, in the short run it will. But for me, I think beyond what it will be to the dollar, what policymakers are trying to do is easy access to Nigerian product abroad, and also for Nigerian business people who have employed people but engage but require input factor from China, apart from, because if you consider those who produce bottled water now, they need to have expanded polystyrene, which mostly come from China. So these are input that you must use in order for you to produce finished good for Nigerians to consume. If no, you are not importing pure water from China, but the plastic that will be used to package pure water, that is where they have the plates. And for you to blow the plate, you need to buy them. So such person, we have to wait till we have FX in the US dollars and so on and so forth. But CBN tends to have removed that. You can now deal directly with China, and also goods that are produced in Nigeria. Nigeria can access that without necessarily going through the headache of a must to have the US dollar before all of this transaction can happen. So with this now, it seems to be a better conversation we had with the third party country, used to be third party country, which is now the US, which is now the Chinese yuan.
You are talking about the Chinese yuan, and that's dealing with trade relations with China.
Directly.
Now, international trade requires the dollar. How does that work out?
Now, if you are dealing with Germany, you will go through the dollar. If you are dealing with China now, you don't need the dollar before you can now deal with China again. So you deal with one since you are dealing. If you look at this, which country do we deal more with? Is it Germany? Is it America? Is it China or Ghana? We have large trade relations with China. Arguably, China is perhaps the largest, arguably. So if China is the largest, it makes economic sense for us to have tools, economic tools, exchange tools that make us to relate with them directly without necessarily going through a third-party currency. What happens if there is war, God forbid, in the United States, and there is economic quagmire? Let's say, you know, when September 11 happened, it affected a dollar badly because that is where it happened. But this may not have so much effect if you are dealing directly with China. The question somebody may want to ask, what if it now happened in China? You still go back to your US dollars, which it gives your currency somewhat of value, and it pays Nigeria to have direct relationship with this country rather than always going through the United States. Of course, this does not mean it doesn't have its own demerit. It does have its own demerit, but in exchange for Nigeria, I think the merit is much more bigger than the demerit you may want to consider at this point in time.
Now, as an investor, there are things the investor should watch out for.
Yeah, there are a lot of things investors should watch out for, particularly Chinese investors. China seems to be everywhere in the world today, and perhaps in trying to harness its powers. And the country you seems to be competing with, arguably, is the United States. So if you know that your currency will not be affected in the largest economy in Africa, is a lot of concern for China. So as much as this deal is important to Nigeria, it's also important to Chinese people. So when you talk about portfolio investment, you are talking about something else entirely. But when you are talking about real investment, when you are talking about the real economies, you are talking about perhaps road construction, you are talking about building railways, rail system, you are talking about fixing our airways, and fixing our airlines, and perhaps going into airline business, etc., you will surely at one point or the other need China. So significance of China in production, significance of China in manufacturing is very key. I'll give you an instance. If you want to import paper or woman hair, that is largely consumed here. Hey, you may not have the finished product, you may have semi-finished product, you are coming to Nigeria to finish it, you will still need China. So for business people, it's going to make a lot of sense to them, etc., just to get access to this fund. Import, but this is where I would like to put a caveat to it, that government should also encourage those that are importing from China to import producers' goods, then come to Nigeria to finish it. When we import producers' goods, someday it makes us to also keep being producers. I give you instance of by bottled water or sachet water, you need the nylon. But if you are now importing the water directly, then that may now spell doom for us. So CBN, I know there are good policy makers there who could also guide those who are importing, and before you can access it. For instance, the 51 of them, 51 or 52 items, see some ban, you cannot see access because CBN feels those things on the list are ruining the Nigerian economy. So majorly importing of toothpick, etc., which is completely removed. But those that can help build the economy in terms of machines, in terms of things that we cannot produce by ourselves, people can access that directly. And forbidding the exchange rate disparity, cost of exchange rate is removed, inflation that is born that from a third-party country is also removed. Then Nigeria can have a better transaction with directly with our trading partner, in this case China.
Now, your closing remarks. It's supposed to last for 3 years. The auction commenced about 2 weeks ago, and it's supposed to last for 3 years.
Yeah, for me, I think it's just for the two countries to, the People's Bank of China and Central Bank of Nigeria, it's just to test run and see what of these we resort to. And I think what Nigeria has to fear is Nigerians, now Nigerian business people, trying to turn this to consumer products. And I think this is where regulation and CBN needs to stand firm to say, we cannot allow you to turn this to consumer product. It has to be majorly producers' product. Come to our country to enhance you to produce, because commodity will look relatively cheaper in the short run, and if this is well managed even in the long run, cost of goods and services may eventually fall if it is well managed. But if it's not managed, if you turn it to producers' good, then it may also affect local industry. So for me, I think it's good news for everybody, particularly Nigerians, and also for China. It's a big news for China. China is already celebrating, even more than Nigerians. Nigerians are celebrating this because it means more inflow to the economy as much as it means more inflow to our economy. At the end of the day, it appears to be a win-win situation for both banks and for both countries.
Cherry news for Nigerian investors.
Yes.
Well, it's been a pleasure talking to you, Paul Alaje.
Thank you so very much for having me. Yes,
thanks for joining us.
Thank you for having me.
Good. We now take a look at international currency markets. How are the currency faring? Let's take a look. The United Nations Food Agency says world food prices fell 3.7% in July from the month before, with declines seen across all crop types. The Food and Agricultural Organization, FAO, said the drop was the sharpest monthly drop since last December. FAO's food price index, which measures monthly changes from a basket of cereal, oilseed, dairy products, meats, sugar, averaged 168.8 points in July against revised 175.3 in June. The decline in July was driven by weaker export quotations from wheat, maize, and rice. Here is an outlook at the price of corn and other commodities. Equities market closed Thursday on a positive note as the NSE OSHA index appreciated by 0.21% to close at 36,688.91 basis points against 1.09% depreciation recorded previously. Muplang Dakok has details.
The Nigerian Stock Exchange NSE ended the first half of the year with a 0.09% increase in the all-share index and 1.9% gain in market capitalization. Analysts have projected that increased political uncertainty generated by pre-election activities will further constrain the performance of stocks in the second half of the year. We see that playing out this week, as the week has been one of pluses and minuses. On Thursday, the NSE All-Share Index gained 0.21% to close at 36,688.91, and market capitalization gained to close at 13.391 trillion naira, largely due to the 128 billion naira of notable chemical industries. Investors exchanged 120 million shares worth 3.5 billion naira. NACO, UBA, and FBNH recorded the highest volume of trade, with NACO trading over 130 million shares. Price gainers for the day were led by Total, Ecobank Transnational Incorporated, and Zenith Bank, while the losers chart was topped by Nigerian breweries, Guinness, and Flour Mill.
Oil prices sank to the lowest in over 1 month as rising United States inventories, higher output from the Organization of Petroleum Exporting Countries OPEC, and Russia pressure impacts the market. Futures fell for the third day in New York, losing as much as 1.1% to hit their lowest level since June 22nd. But U.S. government's data showed a surprise gain in nationwide stockpiles. OPEC's July output climbed as Saudi Arabia's pumped near record volumes, while Russia boosted production to unprecedented levels since it joined the cartel in a coordinated cut in January of 2017. Stocks in Europe moved higher Friday as investors digested new corporate earnings. Here is a summary.
African stock markets maintained mixed trend on Thursday, 2nd August. South Africa's JSE Africa Top 40 declined 1.83% and closed 50,340.48. Tunidex 0.53% and Namibia Overall Index 2.29%, while Kenya Nairobi All-Share climbed 0.00% and closed 170.78, and Ghana's GSE Composite Index also gained 0.18% and closed 2,859.19. In the US, the S&P 500 and Nasdaq Composite rose as Apple became the first US publicly traded company in the history to reach $1 trillion in market value. The S&P 500 advanced 0.5% to 2,827.22, while the tech-heavy Nasdaq jumped 1.2% to 7,802.69. The Dow Jones Industrial Average closed just 7.66 points lower at 25,326.16, nearly erasing a 200-point loss. European markets closed sharply lower after the Bank of England announced a rate hike. DAX fell 1.50% and closed 190.72, FTSE 1.01%, and CAC also depreciated 0.68 and closed 5,460.98. Asia markets fell following an overnight mixed session in the US as renewed trade concerns offset strong gains in tech. Nikkei fell 223.17 points, Hang Seng Index declined 2.27%, and Shanghai Composite depreciated 57.3 points to 2,767.23.
And that's it for Business Express this week. Let's do it again on Monday. Thanks for watching. I am Amina Nujeng.